Hey everyone, welcome back. So in this video we are going to solve some P1 related questions of this topic so that we know that how is this tested in MCQs. The first question says, on 31st July the bank column in Jay's cash book showed he had 312 in the bank. 312 balance carried down in the bank, and this is a positive balance because the question is silent, so we will assume that it is a positive balance. Then on the same date, his bank statement showed a debit balance of $53. A debit balance in the bank statement means positive or negative? See, debit balance in cash book means a positive balance, but we know that the treatment is opposite in bank statement. So debit balance in bank statement means a negative balance. So in cash book we have a positive balance, in bank statement we have a negative balance. Now it is important that we know the signs, because when we do the calculation, if we take the wrong signs values, they will change the answer. Then the question says it was found that bank charges 47 had not been recorded in the cash book, and a check 318 from a customer had not been credited by the bank. Okay, so we know that bank charges are recorded in the cash book to update the cash book, and on which side? On the credit side. And a check 318 from a customer had not been credited by the bank. Is this unpresented check or uncredited deposit? Had not been credited by the bank means this is an uncredited deposit, right? It's important that we first identify the items so that we know how are they adjusted. The question says what is the bank balance that should be shown in Jay's statement of financial position on 31st July. Now there are two ways through which we can find out the answer, particularly in this question. The first one is if we update the cash book. If we prepare the updated cash book, and we know that we start with the balance CD of the unadjusted cash book that is given in the question. 312 in the bank, a positive balance, so brought down would be 312. Then the items that will be adjusted in the updated cash book is only one, and that is bank charges 47. That comes on the credit side as it's an expense. Uncredited deposit won't become part of updated cash book because that is already there in the unadjusted cash book. This needs adjustment in the bank reconciliation statement, right? So it won't be adjusted over here. Now this will give me a balance carried down of 265. Again, CD on the credit side, a positive balance and asset. So my bank balance that will go in the statement of financial position would be of 265, option A. Another way to solve this type of question is when we have balances for both the statements, that is cash book as well as bank statement. So another way would be that we start with the balance as per bank statement, because that is given, and that is 53 negative minus 53. Then there is one adjustment related to bank reconciliation statement, that is the adjustment of uncredited deposit. And we know that if we start with the balance as per bank statement, we add uncredited deposits. Where do they exist? They exist on the debit side of my cash book, but they are absent on the credit column of my bank statement. So 318 would be added. 318 minus 53 would be again the same answer, 265, which is balance as per updated cash book. So in both the ways we will arrive at the same answer, that is option A. But this is only possible if we have the balances, the two non-reconciling balances of the two statements. Let's move towards the next question. It says Naila provided the following information at 31st August. Okay, we have debit balance in cash book at 31st August. Debit balance means positive balance. Cash book had a positive balance. Then there are uncredited deposits, again existing in the unadjusted cash book, needs requires adjustment in the bank reconciliation. Same goes for unpresented checks. Then it also says that interest charged in error by the bank, $10. This has been charged as an error. It wasn't supposed to be charged by the bank. it has been deducted in error, it wasn't supposed to be deducted. This is what it means. The question is, what was the credit balance? Sorry. What was the credit balance on the bank statement at 31st of credit balance means positive balance or negative balance. Credit balance in cash book means negative, credit balance in bank statement means a positive balance. So whatever the answer will be, it has to be positive. And in this question we have to find out the bank statement balance because that is not given to us. Now we know how do we do this. There's only one way to find out the bank statement balance, and that is through bank reconciliation statement, and that too if we start with the balance as per updated cash book. In this question there are no adjustments given related to update the cash book. This means that the debit balance in the cash book amounting to 449, if I make the updated cash book, this debit balance says there are no adjustments on either side, so treat this as the updated cash book balance. This means that if I prepare the bank reconciliation statement and if I start with balance as per bank statement, which is right now unknown, and if I add uncredited deposits and I subtract unpresented checks, the amounts are uncredited is 424 added, 175 subtracted, and the bank error, the interest charged in error by the bank, $10 have been deducted from this bank statement balance, whatever that would be. They were not supposed to be deducted. So this means that now if I have to correct the error, I will add back these $10 in my bank statement balance. So add interest charged in error, so that I arrive at my balance as per updated cash book, which is same as the unadjusted cash book balance, as there are no adjustments required in that statement. So this is how. Now this is one way of doing this. The second one would be if you start with the balance as per updated cash book and you add unpresented, you subtract uncredited, and you subtract the interest charged as well. The answer would be same. To keep it simple, I have used this format. Now if you are calculating answer in this manner, we know that since bank statement balance is unknown, so we have to work backwards in order to find out the answer. This means that 449 minus $10 plus 175 minus 424. The answer would be $190. That is my balance as per bank statement, and it is a positive answer. So yes, that was required, a credit balance. Option A will be correct. Now the errors could be of any type. It will depend upon the error whether it needs to be added or subtracted from the balance. Moving towards the next question. Wasim received a bank statement. He found that the bank had charged interest twice in error and that a dividend had been received on an investment. Okay, what is the first error? What is the first adjustment? Bank has charged, again interest has been charged in error and that too twice, and dividend had been received on an investment. Both of these have been found by looking at the bank statement, as they were there on the bank statement but not in the cash book. Wasim then updated the cash book and prepared a bank reconciliation statement. Where did he record these two items? Okay, so bank interest charged in error twice by the bank, same as the previous question, will not require any adjustment in the updated cash book. Why? Because we will charge it just one time. The error needs to be corrected in the bank statement, and that we do by correcting it in the bank reconciliation statement. Okay, we don't change the bank statement, we correct it through bank reconciliation statement so that we can reconcile the two balances. And the second adjustment was dividend had been received on an investment. This could be a credit transfer, and that is recorded on the bank statement, but that is not present in the updated cash book. So of course it will be adjusted in the updated cash book, and that too on the debit side. So bank error will be corrected through bank reconciliation statement, and dividend will be adjusted in the updated cash book. So option B. Next, Alicia's cash book showed a debit balance of $100 on her bank account. She compared her cash book to the bank statement and updated the cash book for the following items. Okay. What was the debit balance on the bank account after the cash book was updated? So bank statement balance isn't given to us. We don't require that as well because we just have to update the cash book. So if I prepare an updated cash book starting with the brought down balance and which is positive debit balance $100, then the adjustments are credit transfer to a credit supplier $80. Now credit transfers, we know that they are recorded on the debit side, but keep in mind that whether that credit transfer is from a customer, so that will be a receipt, but if it is to a supplier or to any other third party, that is payment, a cash outflow. Or similar to a standing order or direct debit. This is from our business to the supplier, so that will be adjusted on the credit side since it's a payment to a supplier which the bank is making on our behalf. That is a payment. However, credit transfer from a credit customer, that is a receipt. That will be shown on the debit side of my updated cash book. And third is bank interest paid, again paid by the bank without notifying us, and that's an expense, that's a cash outflow, so it will also be credited in my updated cash book. So the answer would be 100 plus 112 minus 80 minus 19. My carried down would be 113, a positive cash book balance. Option C. Moving towards the last question, a very interesting question. The balance of cash at bank shown in the cash book is $1,200, and the bank statement at the same date shows the balance of $1,440. So the two are not same, of course. If I just make an updated cash book, so the brought down coming from unadjusted cash book is $1,200. However, balance as per bank statement is $1,440. Now the question is, what could explain the difference? The reason for difference could only be found out if we try to reconcile the two balances in order to find out the cause of difference. Now let's read options one by one and try to adjust them. The first says payment to a supplier 120 entered on the wrong side of the cash book. Okay, so if this error has been made, this error will require correction. Now the question is where? Either in the updated cash book or in the bank statement? In the cash book, of course, because the error has been made on the cash book. Now, what was the error? Payment to supplier 120 entered on the wrong side of the cash book. What is the correct side? A payment, a cash outflow should have been recorded on the credit side, but in error 120 has been recorded on the debit side, and then this balance was extracted. Now in order to correct this error, I will have to make an entry on the credit side but with twice the amount of the original transaction, so that the first 120 cancels the effect of the wrong adjustment on the wrong side, and the next 120 recognizes the correct entry on the correct side. So 240 should have been credited in order to correct the error. Now let's see, does this reconcile the balances? 1200 minus 240, what would be the answer? The updated cash book will give me an answer of 960, and that won't reconcile with the bank statement balance. So this is not the right answer. The right answer would be, which would give me the same balance as per bank statement as well as in the updated cash book. So option A can't be right. Let's move towards option B. Option B says bank charges 240, not in the cash book. Okay, so bank charges aren't recorded in the cash book. Of course, they will require an adjustment in the updated cash book, and that would again be on the credit side because bank charges are recorded on the credit side. So again the answer would be same, 1200 minus 240, 960 would my carried down balance, and it is not reconciling with the bank statement balance, which is 1440. So again this option can't be right. So option A and option B both are incorrect. Let's move towards option C. It says checks to suppliers 240 not yet presented to the bank. Okay, unpresented checks. How are they adjusted? They are adjusted in the bank reconciliation statement, and that too by subtracting them from the bank statement balance. So unpresented checks amounting to 240 should have been subtracted. Now the answer would be 1440 minus 240, 1200. Oh, 1200. What does this show? This shows that this is reconciling with my updated cash book balance. This is the reason for the difference between the two, that if I just subtract the unpresented checks from my bank statement balance, my cash book balance will reconcile with the bank statement balance, and that's it. That is how it will be corrected. So this means that C is correct. Let's look at D as well. It says receipts from customers 240 banked but not yet entered in the bank statement. Okay, so this means that these are what? Uncredited deposits. Uncredited deposits are added to the bank statement balance. So if this is adjusted, the bank statement balance is 1440 positive, and 240 would, if they are also added, they will increase my bank statement balance to 1680, and that won't reconcile with the cash book balance because that was standing at 1200 only. So D can't also be right. So this is how we deal with bank reconciliation statement P1 related questions. I tried to add a variety of questions in this video, but if there are some more difficult or challenging questions in past papers, it would be really good if you comment them in the comment section, and I try to include them in videos as well. Okay, till then, take care. Allah Hafiz.